This right here is interesting because the Korean stock exchange tends to be a leading indicator of a global economic crisis, and we had it falling down significantly ever since the beginning of 2018. It happens to be one very good indicator because it tends to be an exporting nation, and there is a lot of history behind this. This chart only goes back to 2013, but you can see for yourself how it tends to be a leading indicator of that. And so if this is any guide, we're in for a real treat. Something I always like to mention whenever I can, what you're looking at in the purple here is the Fed's assets, and you can see how they're weaning off. The black line right there is the Fed funds rate. And notice if you look at the negative portion here, this is called the shadow federal funds rate. And essentially what this is basically the effect of the amount of money printing, what it would equate to in terms of interest rates. I don't know if I made sense with that, but essentially, if you were to bring interest rates down into the negative territory at 3%, as they did in the shadow Fed funds rate, it would equal the amount of money that they printed. So I hope I made myself clear in the most confusing way as possible, but basically that's that. So I think it's interesting to see this. Of course, it's a theoretical model that they're doing here, but it would be very interesting to see them actually going into the negative next time around. Okay, really quickly, two more. You're looking at the United States state and local government retirement funds as of 2016 numbers. Although they're outdated, it's actually gotten worse since then. All of them are in the red. Can you believe this? We are seeing right now every single one of these pension funds are underfunded. Some of them extremely bad, like Illinois, and those will probably face a crisis sooner rather than later, but they're all underfunded. And how can you have a Ponzi scheme exist and nobody says anything? Most people have no idea what's about to hit them. The pension funds problem is so serious, and yet most people are completely and entirely kept in the dark. And I just wanted to give you an idea of what the debt of the US really breaks down into. US investors make up, in fact, the largest percentage of the holders of US debt. It's actually 32.5%. The Fed has 11%, the US government has 27%, and foreign investors have about 29%. And then you could see on the bottom right hand corner how it's broken down by country. China and Japan have over $2 trillion between the two of them. No matter which country you look at, it's important to know who owns that debt. Okay, it's very important to see that and to see the breakdown of it whenever you can. Interconnected with all of these charts, Geoffrey Gundlach, Double Line Capital's Chief Investment Officer, hosts his annual Just Markets webcast, offering his outlook for the year ahead. Here's what he said last year and what happened as of December 31st. So I looked through this Bloomberg article. Basically, they break down exactly what he predicted and then what actually happened. And I think it was all but one or maybe two of these that he wasn't right on. And you could just go through, in this case here, showing US equities, you're looking at emerging market equities. He just goes down further and further into all of the different markets. And it's amazing how accurate he was. It's crazy. So right now what he's saying is that we need to be worried. He was warning, of course, all throughout 2018, got laughed at quite a bit. But anyway, regardless, I've been showing the charts from Double Line here. I just want to give him credit on this, and anybody who has been paying attention to this knows really what's happening. But I just wanted to make a very clear mention of where I'm getting the data from and how important and how accurate this has been. So that's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, you're supporting the channel, so I do appreciate that very much. And last but not least, if you want the financial education that you were not taught in school, these two books have everything that you need. You can get the foundation, the history, the asset classes, how to make money, tax incentives, and so on, all in these two books. You got to check it out at the link in the description. If you want the audiobook version, you can get that at themoneygps.com.